Assalamualaikum warahmatullahi wabarakatuh to Madam Asniza. Today our group are going to present on other assurance services. Our group members are Nurul Husna binti Ibrahim, Wan Sharifah Arnida binti Wan Abdul Rahman, Nurul Rafidah binti Mamat Adnan, Nurul Puteri Nur Syafiqah binti Shahifulhisam, Izzati binti Zainuddin, Siti Ashikin binti Sahari, Nursyafikah binti Asnawi Asmar, and Nursyafikah binti Mamat.
Assalamualaikum, my name is Nurul Husna binti Ibrahim. So today I would like to present about the learning objective one, which is to understand the levels of assurance and evidence requirement for review and comparison service. So for the review and comparison service part is about for the non-public companies, which is partnership or sole proprietor, may have their own financial statement to review and compare by the CPA rather than auditing them. This is happened because of the company management believe that the audit is unnecessary due to the active involvement of owner, and the company itself may not have significant amounts of debt or the other regulatory requirement to comply with. It is also because of the management does not require an audited statement for internal use. So the company also need help from the CPA to prepare the financial statement for the internal use, or to provide the creditor and lender under the loan agreement. So the lender must to compile or review of the financial statement depends on the size of loan that they have been made. So a review provides financial statement with a limited assurance, which implies the compilations does not provided express assurance. So the standards of compilation and review of the financial statement are referred as standards for accounting and review service, SSARS, which is issued by Accounting and Review Service Committee of IPA. This is also used for the preparation, compilation, and review the financial statement by the reporting accountants. So, as they are not conduct the audits, SSAR is referred to CPA who are perform the review and compilation service accountant, but not auditors. So during the preparation, the accountant have no assurance, no attest, and no independence required, and they also does not have to give opinion or conclusions to the client. So the management must understand that the agreement state that no assurance provide. This is okay, because this is a very important to have agreements, which is engagement letter, and the management must state, and the accountant must state that there no assurance provide. This is because of to avoid the management refuse the issues disclaimer or upgrade to the compilations. So after that, a review service such as SSARS review, which is provide financial statement with limited assurance. Limited assurance is whether anything has come to the audited attentions may cause the auditor to believe that the financial statement that have not been prepared in a material respect in accordance with approved accounting standard. Okay, in the other words, the engagement is designed to allow auditor to state invite assurance that the financial statement are in accordance with approved accounting standards. So, however, even if the limited assurance is given, the auditor conducting the review must remain independent of the client. Okay. So for the next is about the relationship between evidence, and assurance attained. So, since the review and comparison service provide less assurance than audits, the accountant should establish an understanding with the client about the service to be provided through a written engagement letter. This is a very important for to state the engagement letter in the engagement letter that they have only do the limited assurance. So, what I have understand about this graph is when you need to do comparison and review, there are no what we call it. They have a levels of they have a little levels of assurance attained, which is when you do the comparison and review. Other than that, if you do the audit, the higher of levels of assurance is needed. So that's what I understand about this graph. So we proceed to the next slides, which is the procedure suggested for review. Okay, we have 6 steps to do the review procedure, which is firstly is obtain knowledge of industry. Obtain knowledge of the industry is when the accounting need to study about industry to guards or other resources to obtain industry knowledge. So the levels of knowledge for review and somewhat less than for an audit. So next step is the obtain the client and the client business environment, which is the accountant must know about the client business nature, such as their accounting records and employees, the accounting principles and practice that used by them, and then the content of the financial statement, and the levels of knowledge can be less than for an audit. So next is make inquiries of the management, which is inquiries is very important important part in the review procedure, which is to determine whether the financial statement reflects fairly presented. Assume the management does not intend to deceive the account. So inquiries must be made of the appropriate client personnel and trafficker involved discussions, such as you must need you must inquire the management about the what you not understand and what you want to know. So that is the part. Next is about to perform analytical procedure. Okay, based on the accountants understanding of the industry and knowledge of the client, the accountant design and perform the analytical procedure. These identify relationships and individual items that appear to be unusual. Unusual trends are note that the accountants engage in further inquiries with the client personnel to obtain explanation for unexpected relationships. So next step is obtain a letter representation, which is the accountant is required to obtain a letter presentation from members of management who are knowledgeable about the financial matters. So the last stage is to prepare documentation. Documentation is very important, which is the accountant should prepare a documentation that's sufficient in detail to provide a clear understanding of the work performed, the review evidence obtained and its source, and the conclusion reached. So the documentation should include about the engagement letter, analytical procedure performed, significance matter covered in the inquiries of with management that have been inquired before, and then significance findings and issues, communications with the inquiries and issues, communication with management or other regarding possible fraud and representations letter. So that's all from me. I will pass to the.
Okay, Assalamualaikum warahmatullahi wabarakatuh. My name is Sharifah Arnida Binti Rahman. I will present about the form of report. Okay, this is an example of the form of review report. When the accountant has complete review engagement and decide there is no material changes in the financial statement. In the form of review report, there is a four paragraph that has in the form of review report. Okay, for the first paragraph, it states that statement, the review of analytical procedure and inquiries. For the second paragraph, it specifies about the management responsible for preparation and fair presentation of the financial statement in accordance with accounting principles generally accepted in the United States of America and for designing, implementing, and maintaining internal control. Okay, for the third paragraph is notes of the accountant's responsibility to conduct a review in accordance with statement or on standard for accounting and review services issued by the American Institute of Certified Public Accountant. And for the last paragraph is the expenses limited assurance in the form of fixed assurance. Okay, the date of the form of review report must be the date on which the accountant has accumulated review sufficient evidence. If the client fails to follow accounting standard in review engagement, the report must be modified. Okay, next we move to the comparison service. Okay, what is comparison service? Comparison service defined in SSARS one in which accountants present to a client or third party of the financial statement that the accountant has prepared without providing any CPA assurance about the statement. Okay, the CPA does not have to issue a comparison report as long as the CPA document in the engagement letter with the client understand regarding services to be performed and a restriction that financial statements are only used for the management. Next, okay, as we know, every accountant needs to responsible exercising due care in all duties. Okay, so there is the requirement for comparison for engagement. Firstly, accountant needs to establish understanding with the client about the objective, type and limitation of the services provided, and description of the report, possesses knowledge about the accounting principles and practices of the client industry, know the client, which include the nature of its business transaction, content of its financial statement, make inquiries, read the compiled financial statement, and adhere to any obvious omission or error. Okay, and lastly, prepare the presentation in sufficient detail to provide a clear information about what they perform. Okay, accountants do not have to make inquiries or perform other procedures to verify information, but if they want, they should obtain additional info. But if the client refuses to give the information, the accountant should withdraw from the corporation investment. Okay, for the form of corporation report, there is three types of form of corporation report. Firstly, full disclosure, no disclosure, and last, corporation without independent. Okay, for the full disclosure report, what I understand is for the full disclosure report, it state all the relevant and necessary information for the understanding of a financial statement that should be included in the set of financial statement. Which means that the company have give a full and fair view about its financial statement to the accountant or the auditor. For more disclosure, are typically used for management purpose. When the accountant lacks of independence, this has additional paragraph must be added at the last paragraph. Okay, for no disclosure, maybe the company have hide some uh, maybe the company have hide some error of the company or not give a true interview to the content. For example, the company not presented its cash flow. Okay, and last, corporation without independence, which means that the CPA firm can issue a corporation report with full or omitted disclosure, even it is not independent on the client. Okay. Uh, this is an example of the full disclosure, and this is an example of no disclosure. As you can see at the last paragraph, the council has said some additional info about the company. Okay, that's all from me. Thank you.
Describing special engagement to review interim financial information for public companies. The essay requires quarterly financial statements to be reviewed by the company's external auditor prior to the company filing of the Form 20. And the essay also requires for the company to to disclose their information at the footnote in the annual audited statements of their sales, their gross profit, their income, and also their earning per share for the past period. And this footnote will be labeled as unaudited. There are 5 requirements for review service engagement. First is to obtain knowledge of the accounting principles of the client industry. Second is to obtain knowledge of the client itself. Third is to make inquiries of the management. Fourth is to perform an analytical procedure. And lastly is to obtain the letter of representation. Okay. Same as review under SSARS, a review for a public company does not provide a basis for expressing a positive form opinion, and there will be no test will be done for the accounting records. However, the auditor review for different areas, and these are the key differences. First, the annual audit is also performed for the public company client. Thus, auditor need to obtain sufficient knowledge about the client's internal control for both of their annual and also interim financial statements. Auditor knowledge of the result of the annual audits will be used in considering the scope and result of the inquiries and analytical procedure for the review. Under SSARS, for public companies, auditors read the needs from the directors and shareholder meetings. Auditor should obtain evidence that the interim financial statements agrees with the accounting record for the company. The review will be conducted according to the standards of the PCAOB, and there is no reference to the SSARS in the review report. If the auditor finds that the interim statements violate accounting standards, the report should be modified. And the modifications is just as the review as under SSARS, except that the auditor needs to state the effect of the departure, only if the amount can be determined. Quarterly, data review by the auditor will be included in the footnote, which will be labeled as unaudited, as I said before. But it will be not required in a separate review report. Okay, that's all from me. Thank you. So I'll pass this to the next presenter. Thank you.
Assalamualaikum. Next, I will talk about the attestation engagement, which is it divided into three, which is attestation standard, type of engagement, and level of service. Okay, what is attestation standard? It is where AICPA had issued 11 attestation standard that parallel the 10 generally accepted auditing standard. The attestation standard is stated in sufficiently general terms to enable CPAs to apply them to any attestation engagement, including new types of engagement that may arise. The most notable difference in the attestation standard and the 10 general accepted auditing standard is Standard 2 and Standard 3. Standard 2 are required that the CPA have adequate knowledge of the subject matter over which there is attestation. For example, for CPAs to attest to a company compliance with environmental protection law, they need a true knowledge of the law and methods that companies use to assure compliance, while Standard 3 requires that the CPS be able to evaluate the subject matter against criteria that are suitable and available to users. So, using the same example, measurement difficult of the lack of specific criteria may make it difficult for the CPS to conclude whether there is a compliance. To provide additional guardians for doing attestation engagement, the Auditing Standard Board of the AICPA issues standard of the standard attestation engagement, which is SSAE. In general, auditing standards apply to attestation that deal with providing assurance of historical financial statement, including one or more part of those statements. These include audit of financial statement prepared in accordance with accounting standard or some other comprehensive basis of accounting audits of only a balance sheet of audit and individual accounts. Next are type of the attestation engagement. The Auditing Standard Board decided not to attempt to define the potential boundaries of the attestation aspect in conceptual terms because the new services are likely to arise. For example, PricewaterhouseCoopers have been attested to the balloting for the Miss America contest for decades, but attesting to comply with environmental protection laws started only in recent years. So the AICPA has developed specific attestation standard in the following areas, which is prospective financial statement, report on the internal control of the service organisation, performance financial information, report on internal control over financial reporting private company, complying with law and regulation, agree upon producer engagement, management discussion and analysis. So the standards are necessary for this type of engagement because the CPAs already perform this service in sufficiently large number to need more specific guidance than the general attestation standard provided. And lastly is level of service. Level of service has three types, which is examination, reviews, agree upon procedures. What is examination? Examination is an examination result in the positive conclusion. In this type of report, the CPA makes a direct statement about whether the presentation of the assertion taken as a whole conforms to the applicable criteria. D is for the engagement to determine that the rate of return of hypothetical portfolio based on the broker firm's buy-sell recommendation. Second is review. In review, the CPA provide a negative assurance conclusion. For the negative assurance report, the CPA's report state whether any information come to the CPA attention to indicate there is assertion are not presented in all material aspects in conformity with the applicable criteria. And lastly is agreed upon procedure engagement. All procedures that CPAs will perform are agreed upon the CPAs that are responsible party making the assertion and the specific person who are in the intern user of the CPA reports. Accordingly, such a report are limited in their distribution that only involved party who know the procedure of the CPA will perform and level of the assurance resulting from them. The report should include a statement of what procedure management and the CPA agree to and what the CPA found in the performance the procedure. Okay, thank you.
My name is Izzati Binti Zainuddin. Next, we are going to look on web trust and sales trust. As we can see, most organizations rely heavily on IT to conduct business. So in response to consumer demand for evidence that web-based business is trustworthy, a number of third-party organizations are offering seals of assurance. To legitimately bear the seal, the company must show that it complies with certain business practice, capability, and controls. Okay, first we are going to look on web trust. In web trust, a client engage a CPA to provide reasonable assurance that company website complies with a certain trust service principle and criteria for e-commerce activities. The ICPA and KICA established web trust program in 1997. The organization undergoes an examination according to ICPA standard for attestation engagement to display the web trust seal. The examination focused on area of business practice, business integrity, and information protection. The seal must be renewed for every 90 days, if I'm not mistaken. Okay, CPA firm will update its testing of e-commerce aspect to ensure that the client site continues to comply with the trust service principles and criteria at least once in every 12 months. CPA firm will also update its report. If the site does not comply, the seal can be revoked. CPA firm assess whether the company website complies with the 5 trust service principles. Okay, so these are 5 trust service principles. First, security. The system is protected against unauthorized access, both physical and logical. Second, availability. The system is available for operation and use as committed or agreed. Third, processing integrity. System processing is complete, accurate, timely, and authorized. Fourth, online privacy. Personal information is collected, used, retained, disclosed, and destroyed in conformity with the commitment in the entity privacy notice and with the criteria set forth in generally accepted privacy principle issued by ICPA and KICA. And the last one is confidentiality. The information designed as the information designated as confidential is protected as committed or agreed. Okay, next we go to the sales trust. Okay, ICPA and KICA had introduced the sales trust in 1999. It is designed to increase management, customer, and trading partner confidence in systems that support entire business or specific processes. Unreliable system can trigger the chain of business event that negatively affect the company, suppliers, customer, and other business partners. In Systrust engagement, CPA will evaluate a company's computer system using trust service principles and criteria and determine whether control over the system is exists or not. Then the CPA will task the determine whether the control were operating effectively during the specific period. If the system meet the requirement, then an examination level unqualified attestation report is issued under IPA attestation standard. Trust service will enable organization to differentiate themselves from their competitors. Those organizations that undergo a trust engagement will be perceived as competent service providers and trustworthy. Okay, next I will explain on internal control report at service organization. So what is SAS 70? SAS 70 is the statement on auditing standard number 70. It is an older auditing standard developed by American Institute of Certified Public Accountant, IPA. It provides standard for reporting on controls and processes at service organization, but SAS was superseded by SSAE 16 in 2011 and by SSAE 18. SAS 70 is an auditing standard, whereas the SSAE is an attestation. Okay, so when the IPA made the decision to replace the SAS 70, they thought it more appropriate for a service organization audit to be an examination of a system, which is different than an audit of financial statement. The SSAE 16 report require a description of a system along with a written assertion with management on the design and operating effectiveness of the control being reviewed. Um, the SAS 70, however, lack the control of detail that the SSAE 16 offers. The SAS 70 simply provide a description of controls and did not include any type of management assertion. SSAE 18 is the current set of standard that guidance for reporting on organizational controls and processes at service organization. It supersedes the SSAE 16 and it is intended to update simplify previous standard. So there are two types of report for this engagement. First, first type of report on fairness of the presentation of management description of service organization system and the sustainability of the design of the control to achieve related control objective included in the description as of a specific date. And then the type 2 report on fairness of the presentation of management description of a service organization system and sustainability of design and operating effectiveness of the controls to achieve the related control objective included in the description throughout the specific. So in type 1 report, the service auditor obtain and read the system description prepared by organization management and will express an opinion on whether the service organization description of its control present fairly in all material respect. The relevant aspect of the service organization control that had been placed in operation as a specific date and service auditor also perform the procedure to obtain sufficient evidence to obtain reasonable assurance and whether the controls were suitably designed to achieve specific control objective. And the last one, in a type 2 report, the service auditor will express an opinion on the same item in type 1. And whether the control that were tested were operating with sufficient effectiveness to provide reasonable but not absolute assurance that the control objective were achieved during the period specified. Next, I will pass to the next presenter.
Hi, my name is Siti Binti Sahari, and I'm going to present the Learning Objective 6 in Chapter 25, which is Prospective Financial Statements. Prospective financial statement refer to predicted or expected financial statement in some future period, which is income statement, or at some future date, which is balance sheet. For example, management's predictions of the income statement and balance sheet 1 year in the future. There are significant opportunities and potential risks for auditors to provide credibility to prospective financial information. It is widely accepted that users want reliable information to aid their decision making. If the reliable information improves, then the information risk will be reduced. The risks arise because of the actual results obtained in the future may differ significantly from the results predicted in the prospective financial information. Okay, so there are two general types of prospective financial statement, which is forecast and projections. Forecast is present an entity's expected financial position, results of operation and cash flows to the best of the responsible party's knowledge and belief. Banks commonly require this information as a part of loan application, while for projections presents an entity's financial position, results of operation and cash flows to the best of the responsible party knowledge and belief, given one or more hypothetical assumptions. For example, projected financial statements might assume the company is able to increase the price of its primary product by 10% with no reduction in units sold. Prospective financial statements are prepared for one of two audiences. First is general use statements are prepared for use by any third party, such as the inclusion of the financial forecast in a prospectus for the sale of hospital bond, and the second is limited use statements that are prepared solely for third parties with whom the responsible party is dealing directly, such as the inclusion of the financial projection in a bank loan application document. Besides, there are three types of engagements. First is an examination engagement, in which the CPA obtains satisfaction as to the completeness and reasonableness of all the assumptions. Second, a completion engagement, in which the CPA is primarily involved with the computational accuracy of the statements and not the reasonableness of the assumptions. Third is an agreed upon procedures engagement, in which the CPA and all users of the statements agree on specific limited attestation procedures. For examination, there are four elements of prospective financial statements, which is first one is evaluating the preparation of the prospective financial statements. Second, evaluating the support underlying the assumptions. Third, evaluating the presentation of the prospective financial statements for conformity with AICPA presentation guidelines. And the fourth is issuing an examination report. That's all from me. Thank you, and I will pass to the next presenter.
So my name is Nursyafikah Binti Asnawi. So I would like to present about describe agreed upon procedure engagements. When the auditor and management or third party user are agreed that the audit will be limited to certain specific audit procedure. Many CPA refer to this as procedure and finding engagement because the resulting report emphasizes the specific audit procedure and perform and the finding of those complete procedure. According to the SAS, statement of auditing standard deal with financial statement items, while the SSA standard for attestation engagements deal with non-financial statement matter. In a agreed upon procedure engagement under expectation standard, a CPA might calculate the internal rate of return, beta risk for measuring volatility, and other relevant information of interest to investor for mutual funds. For engagement under auditive standard, CPA might do agreed upon procedure on the gross sales account for this agreement. Move on to the describe other audit and limited assurance engagement related to historical financial statement. Examine other types of audit and attestation service that fall with the audit standard but are not audit of historical financial statement in accordance with GAAP or IFRS. Other comprehensive basis of accountings, auditor often audit statement that prepare on the basis other than GAAP or IFRS. Base other than GAAP or IFRS for which report may be issued include, for the first one is cash. With the cash basis accounting, or the cash receipt and disbursement are recorded. Under modified cash basis of accounting, the cash basis is followed except for certain items such as fixed asset and depreciations. For the regulatory agency basis, common example include the information system of account required of railroads, utility, and some insurance companies. For the income tax basis, the same measurement rule used for filing tax return are often used for financial statement preparation, even though it is not accordant with GAAP or IFRS. For the last one is defined set of criteria, substantive report. An example is the principal label basis for accounting. This method for accounting must be applied to all material items in the financial statement. So I would like to pass to the next presenter.
My name is Nursyafikah Binti Mamat. I want to present about specific element, account, or item. Auditors are often asked to audit and issue report on specific aspect of financial statement. A common example is a report on the audit of sales of the retail store in a shopping center to be used as a basic for rental payment. Next, about two different in this type of audit. First is material is defined by the item audited, which is which is account or item being audited rather than for the overall statement. The effect is to require more evidence than if the item being verified is one of many parts of the statement. The second is GAS. First standard does not apply, which is GAS refer to General Acceptance Audit Standard. Does not apply because the presentation of the element of element, account, or team is not financial statement. Prepared in accordance with appliance accounting standard. So, auditor must extend their audit effort to include other element, account, or item that interrelated with those they are being audited. As for the example, they expressing on opinion on sales. The auditor must also consider the effect of account receivable on sale. Next, the next slide is about debt compliance letter and similar report. Auditor may issue report on debt compliance and similar engagement as a separate report, or by adding a paragraph after the opinion paragraph as part of a report that express their opinion on the financial statement. That the following for opinion paragraph. The engagement and report should be limited to compliance matter the auditor is qualified to evaluate. The second is the auditor should provide a debt compliance letter only for a client for whom the auditor has done an audit of the overall financial statement. And then lastly, next. Lastly about debt compliance letter and similar report is the auditor opinion is the form of a negative assurance, stating that nothing comes to the auditor attention that would lead the auditor to believe there was non-compliance. So the definition about negative assurance is determined by the auditor that a particular set of facts is believed to be accurate, such no country evidence has been found to dispute them. So that's all for my presentation and my group presentation. Thank you.